Hi, my name is Peter Akerley. I'm President and Chief Executive Officer of Erdene Resource Development, listed on the Toronto and Mongolian Stock Exchange. We're focused on the development of a high grade, one of the highest grade gold mines being built in the world today, as well as looking for new discoveries in a unexplored portion of the Central Asian orogenic belt.
Good to see you, sir. Very good to see you indeed, Peter. Look, we're going to talk about the Q2 results, obviously, and I think, but I'd like to get into today, and I guess most people would like to hear it is, how's the build going with MMC, and again, time frame to commissioning, revenue, and all of that good stuff. Certainly in this high price gold environment. But first, Q2 results. What do we need to know?
Well, probably most importantly that we have remained on schedule and on budget. We just passed about 40% completion of the mine build as we speak. We're aiming to complete the facility by the end of this year. The critical path is really that process plant, and we now have the ball and sag mill being installed. So, yeah, very pleased with the progress we've made to date. We've commenced construction of the overhead transmission line from China, which was a new addition when we entered this relationship with MMC, and that's about 12% complete and going very quickly. So overall, very happy with the progress.
Right, and then and talk to me about those in the important thing. MMC, in fact, maybe remind people new to this straight. Who are MMC? Why is it a big deal there?
Yeah, so that's a good point. MMC is Mongolia's largest private mining company. They mine two steelmaking coal mines in the southern part of Mongolia in the Gobi Desert. They're the largest supplier of coking coal into China from Mongolia, which is a growing business in Mongolia. But importantly, MMC is a subsidiary of MCS, and MCS is Mongolia's largest conglomerate. They have a number of affiliated companies that are active in all of those business sectors that you would look to tap into to build a new mine and/or for us, what we see as a new mining district. So they bring the construction strengths. They bring the overhead transmission line. It's being built by one of their subsidiary companies. They bring the strengths to build, but they also bring the strengths of relationships. Very well respected and well tapped in from all levels of government and all levels of society in Mongolia. So when you think about what we're doing here, which, as you know, isn't a single mine, it really is looking at a sequential build out of a number of mines. We have what I view as that perfect partner. They brought the money, they brought the expertise, they bring the relationships.
And 500 people working on site today, as I understand it. So it's advancing with someone with a big balance sheet, takes the pressure off of you guys. And it takes the pressure off of you guys to do what? What are you freed up to do?
Well, we're successful in the exploration side. We've now found 4 deposits. We have a number of prospects that we really want to get our teeth into, and our team is now not removed because a number of our key people have sort of transferred into that mine build, but the core of that exploration team is now focused on that exploration and discovery side, which is kind of like the perfect relationship where they do what they're good at and we do what we're good at.
Right. Okay. So in terms of, obviously, if it might be worth explaining the deal structure that you've got, obviously paying for everything, doing everything, getting this thing built for you. How do you and your shareholders benefit again?
Yeah, so the deal was struck to be a 50-50 joint venture at the subsidiary level. So MMC and Erdene own 50% of Erdene Mongol. But outside of that, we've maintained a 5% NSR for our shareholders after the first 400,000 ounces of gold. MMC has brought in $40 million of equity, have now put in place a $80 million senior debt facility as well. So their total contribution is 120 million. And they also bring in the people and that expertise I talked about. For instance, they're training 120 of our heavy machinery people at their site, and they will be employed there until we're ready to bring them over. Just, some synergies, some opportunities that you couldn't have achieved with another company that didn't have existing mines. So there's sort of the big headline numbers of 120 million and their relationships, but there's a number of other, I guess, smaller parts to this deal that are greatly beneficial to the overall efficiency of this mine being built.
Right, and if you don't mind, throwing a few numbers out there in terms of expected ounces produced, how much of that you'll capture, etc.
Yeah. So one of the unique things about this is, perhaps the most unique, is that we went out there and found extremely high grades at surface. So the head grade of this open pit is 4 grams per ton. perhaps one of the highest grade open pits being built today. As a result of those high grades, we have a fairly small footprint. I think we're 2 hectares of ground to put that plant and pit in. $100 million in capex and about an 870 all-in sustaining costs. Again, driven by that high grade, you can mine lower volumes. We'll do an average of 85,000 ounces per year for the initial 6 years of operation, and it's a 7-year mine life initially based on current reserves. But there's a tremendous amount of room to expand that around that into additional resources at both Bayan Khundii and Ulan, the adjacent property, and others that we've discovered in the area.
Right. Now, obviously, I think people in the industry would sort of understand, like, get 7 years mine life for a public company is perhaps a little question mark. We would want to see investors, bankers, etc., would want to see 10 years plus. They'd like to understand the economics of this thing going forward in time. You're also, I guess, factoring in a $2,500 gold price into all of these equations as well. But there's no guarantees of that. But if you were talking to funders, if you're looking to raise capital in a market like this, what are the kind of key levers that you think you've got available for you and that people should be looking at?
Mm-hmm. So at the outset, as we discovered, this tremendously high-grade open pit resource, we made a decision early that we were going to move this quickly towards production. So we went in there and drilled off the shallow portions of this deposit, a fairly tight footprint, and had 540,000 ounces of reserve at about 4 grams per ton. We never really stretched our wings much to explore outside of that. But today, when you look at the combination of resources from Bayan Khundii, Ulan, Dark Horse, and Altan Nar, we're approaching 2 million ounces of gold equivalent resources in that 2 gram, just below 2 gram range. So, we have in our visibility the resources that can push that out well beyond 10 years. It's a question of where we're going to go. And what we focused on today and over the last couple of months is going in around that Bayan Khundii economic pit and at $2,500 gold, looking at how much we can expand this. So we just drilled over 100 holes in the last 45 days, focused on 2 things, the expansion, but also going into these ultra high grade zones. In the top 50 meters, we have multiple intersections of 50 to over 500 grams per ton that don't often show up in your block model with the wider spacing that you do in a resource stage. So we've gone in and done some of that close space drilling that has the potential to bring up that overall grade as well. So really trying to understand at $2,500 gold, how that changes the dynamics around the pit. And there will be expansions. There's no question at this point that pit will be bigger than what we set out to build at $1,800 gold.
Right. So, but in terms of those studies that you'll be doing, internal stuff, will they be external, like market-facing reporting going on in terms of what you plan to do, how that affects the economics, how that extends the life of the project, etc.? When can we expect to see that?
Yeah. So, thinking through that, we'll have a mine plan revision that will be completed later this year. Our initial grade control work will take place from September to November, about 10,000 meters of drilling. And coming out of that, we'll update the market at some point in the first quarter as to what that revised resource and mine planning reserves looks like. Our initial mining will commence in, I think it's mid-March, to get that initial ore into the plant by the time we're into Q2. But yeah, there will be updates. How much we'll get into feasibility type updates is probably not the case, but certainly resource reserve mine plan updates will be made public as we get closer to that first gold.
Right, and let's talk about the market. It's been pretty crappy market for everyone. Even a good gold price, like anything above 2,000, quite frankly, has been good news. And it's kind of crept up to 2,500 stealthily, but has had not much effect on Canadian gold juniors at all. Not much has. It's a very, very tough place out there for retail investors. It's and even I guess some of the value destruction on some of the institutional money as well makes people pause or take pause anyway. how do you, as a company like yours, which is a near-term production, in my head, what I'm hearing is you're 12 months away from producing first pour. Would that be about right?
Yeah, that's right.
Okay. So given that situation, I guess you've got a few options available to you. I'd love for you to maybe talk through what that looks like. Do you sit and wait back for cash to kind of come in to do your expansion? Do you has well, take a run at it and say, let's get after this exploration, expansion, and reporting side of things. I mean, you must have been through the mill over the past 3 years, so now is the time to kind of maybe reevaluating things potentially. How do you come at it?
Yeah. Well, first and foremost, we have been, almost entirely focused on getting this construction project launched and taking all of our resources and focusing on that, even the exploration team getting involved in mine planning. But as we speak, as I mentioned, the exploration team is starting to look at that area around the pit, and we will, over the span of the next, 12 months, begin to develop new resources we can bring into reserves that will allow us to do one or perhaps two things. And that is, if we have those higher grades of gold in those high grade zones, perhaps we can push this head grade up to 4.5, 5 grams per ton. And then you're pushing 100,000 ounces a year. So that's one of the areas that we're focused on. The next one is pit expansion. And, what that does for us is it allows us to see that 10 years plus effectively by just pushing that pit envelope. But there's a number of projects around us, Ulan, Dark Horse, Altan Nar, that are sitting there ready to be a second development for us. And as soon as we move through that first gold sort of threshold, we'll be moving those projects into the queue and beginning more aggressive exploration to push them into that next development phase. So when I think about where this goes in sort of 2 or 3 years post Bayan Khundii production, it is bringing on that second project and bringing us up into that 150,000 ounce per year. Altan Nar might be a second standalone complex, as we've discussed before, given the different metallurgy. But with what we see in the Ulan and Dark Horse and at $2,500 gold expansion of Bayan Khundii, perhaps there's a significant expansion there. So one of those two things I see happening within that first few years, allowing us to effectively double production. That's the path. And exploration in greenfield sites around the area as well. And we've talked about this. There's been no drilling done here before. We are the first people exploring this site. So there's plenty of room for additional discovery and ideally some pleasant surprises of scale that allow us to do the expansions we just talked about.
What I've seen in the past from you, we've been talking a couple of years now, is a kind of prudent approach to managing your capital. And I hear what you're saying about all of those things. It's really what I'm trying to get a sense of is, does the attitude, does the ambition change any because of this high price gold environment, or is that same prudent application of process continue? Does it endure? Because I think you've hit a few buzzwords. Okay, 100,000 ounces a year, that people like that. Plus 10 years, people like that. You've got lots of exploration upside, but so sometimes the market likes to sort of see people kind of really kind of go for it when it comes to building out those ounces. What is your experience? What does your head tell you? What are the conversations at board level tell you about the speed at which you move?
I think there's always been that discussion with our partner and with our board when we entered this relationship with MMC that as soon as we get to that point where we see that cash flow, we're going to turn up the heat on the exploration side. MMC would not have made this investment if they didn't see this as a multi-mine or a much larger opportunity. If you just look at the overhead power line being built from China to site, that isn't about 85,000 ounces per year. It's to do something of much larger scale. So all of the tables being set for that. And yeah, I see us being aggressive, very aggressive on exploration as we move through mid next year. And the easy one out of the gate is Altan Nar. There's 500,000 ounces of gold and 750,000 ounces of gold equivalent with limited exploration. So can we get to 1 million ounces there pretty rapidly? I see that as the sort of the first low hanging fruit, and that will satisfy enough to have that second mine starting up at Altan Nar, let alone what might happen around it or what might happen at Bayan Khundii. So yeah, very excited about getting started on that more aggressive exploration coming into mid next year.
Okay, so when the money comes through, then you get motoring, not before. You're not spending your money before you've got it. Okay, and MMC's attitude to this is they're building a big infrastructure support mechanism because they see this as bigger than 85,000 ounces. That's actually quite good. Talk to me about the NSR then, and the 5% NSR. Does that sit on all of your assets, or how's it broken up?
So, as part of the deal with MMC, we have a 700 square kilometer area of interest. And within that, anything we do becomes a 50-50 joint venture. But those discoveries that are made within a 5 kilometer radius of existing licenses or the existing licenses the day we did the deal will fall under that 5% NSR.
And what are they? Do they have any rights to buy back some or all of that NSR?
No.
Okay.
No.
Okay. That's powerful. Fine. So in terms of your kind of heads up for people, say, right, what's really important for people to actually understand about the potential of what you've got in front of you. You're talking about if you get after the exploration, build this thing out, it could grow into something meaningful. Are there other opportunities ahead of you, or is that everything in this basket is what we should be looking at?
I've been at this for 35 years, and I haven't seen the prospectivity we have in this part of the globe. I've worked in South America, I've worked throughout Asia and North America, and for us to have discovered 4 deposits in a short period of time, 3 of those sitting at surface, never having really spent the time or had the resources to do deeper exploration, I'm tremendously excited about what else is going to happen here. So we really are focused on what I think is the best opportunity for our team globally is to continue to hunt in the Khundii mining district. So yeah, that's going to be the focus. If you look down the road, 5 or 10 years, will we look at something else in Mongolia or internationally? Collectively, perhaps, yes. But there's so much work to do and so much potential for discovery sitting in the Khundii Minerals District. That's where our eyes will be.
Right, okay. And how with regards to the margins, okay, you're sort of making money, right? We talked about, your share of it, but share of what? Are MMC sort of finding that costs can continue to rise? Are the margins diminishing here, or some kind of status quo finally?
I think like anywhere else on the planet, you're going to see labor costs increase, but your labor costs are dramatically lower in this part of the world than they are in North America. Yes, you're going to see your capital costs and operating costs go up, but again, they're relatively lower than what you see in mature mining districts. So I think we'll always have that advantage. And given the grades that we've been able to identify, we have those cost advantages at both ends. So, I don't see the economics changing dramatically. I think we'll have that advantage in place given where we're located and given the types of deposits we're able to discover.
Right. And how do you view, when you kind of get to the next year and you're sort of at that point where June-ish, okay, middle of next year at some point, where revenue is flowing, and there'll be a ramp up and all of that kind of good stuff, and who knows what gold price will be then. How do you treat that capital? You talked about an exploration program across the multiple sites. In terms of your long-term holders, do you think they would expect you to be dishing out dividends, or again, would that not be a prudent use of allocation of capital? Would it be better all in the ground? How do you view managing cash?
Given the cash flow that this is set to generate at $2,500 gold, we're looking at 100 million unlevered at 2,500 split between the two of us. So a portion will obviously go into retained earnings and a portion into exploration. But once we get to steady state, there should be room to come back to shareholders to then do with what they want, whether MMC or Erdene wants to pay dividends or buy back shares. That'll be a decision we'll make. But if gold holds at this price, there'll be plenty to do all 3 of those things. We have a 5-year exploration plan in place that the partners have developed, and we've kind of staged that. But if you look out in 2025, we're probably in that $5 million exploration dollar spend. And as you move into 2026, you're getting closer to 10 million US in exploration dollars being spent. And then it becomes subject to the what ifs of discovery and feasibility studies. But that's kind of gives you a sense of the spend.
Right, but no debt in there, is there?
No.
Okay. So again, looking at what you think, because I look at companies like yours who are near-term developers, near-term producers or producers, and you're getting. We've talked long and hard, and you must talk about in every single interview. The kind of the Mongolian discount. People don't know Mongolia. People don't know China. People don't know certain parts of the world, so they assume the worst, even though there's a lot to be said for mining in some of those countries, in terms of margin. Where do you think you're going to get that step change in your valuation in terms of share price? That's how I make money. When share price moves, what are you going to get for it? Is it purely going to be on gold production? Because I've seen that happen, and companies get no credit, not a meaningful credit for that. When does a step change happen, and what's going to do it for the market, do you think?
Well, I think there's a significant room for us to appreciate just on a re-rating basis, particularly in this gold mine or gold price environment. So as we move towards first gold and hit those delivery points, we'll see a step up in our share price. But it really will come when you talk about that large step change. It is discovery. It's that next big deposit. It's that next development. And we are working towards that. And that's why it's important to us to get that exploration launched and to have that next project coming into the queue. That next project, which I've talked about Altenar, might very well be an expansion that exists around the current Bayan Khundii plant. When we look at the unconstrained resource target around Bayan Khundii, you can easily double what the reserves are today without doing more drilling. So there's room there for us to start thinking about a major expansion pretty quickly if gold prices were to stay or go higher than they are today. And we haven't brought into the mix yet either the Elan discovery, where there's no resource established, but we're hitting 40 meters of 8 grams. So there's things around here that are low-hanging fruit that need a lot of attention from the exploration side.
But again, so just so to hammer this is because it's like I hear you. I look at this thing and go, man, this thing is undervalued, right? But you've got to voice it. You've got to articulate it, not me. Do you think that you will need to have more resources, reserves, production than a regular Western company? Or at the end, does the kind of quality and the margin, because not just the ounces you produce, but it's the margin at which you produce those margins, the cash you have available, what you do with that cash, that people are going to have to wait to discover, wait to value? Or do you think it'll be a level playing field for you once you get into production?
I think you've seen a leveling of that playing field in regards to Mongolia over the last several years. You have 5 now relatively recent startup hard rock gold producers. You have Oyu Tolgoi that's hitting stride. It's going to be the 4th largest copper mine on the planet as we move to the end of this decade. So there's been a maturing and an equalization, I think, of valuation for companies working out of Mongolia. And I think that continues as companies like ours hit stride and people are more familiar with the fact that you can find world-class, high-grade, unique high-grade deposits in this country. So, I don't see that as much of the Mongolian discount that perhaps people saw in the past starts to dissipate as more maturity comes into that environment. But it's always going to be a case of more reserves and more resources, no matter what price point we hit. So that's my job, is to continue to get our team to get out there and find them, and that's what we're focused on. And as I mentioned, we have some drilling underway now, which hopefully will pleasantly surprise as we look at the areas around the outside that.
Peter, appreciate time. Looking forward to next quarter's numbers, see where you're at in terms of the development of the site. Stay in touch. Speak to you soon.
Thanks, Matt.